Welcome to Take Stock Live, investor webinar series, which goes live every Wednesday at 15 minutes after market close. The current Season 3 will run at least through the end of March with a strong emphasis on mining, though next week we will have two agri-tech companies, CSX and MGRO. We thank the TMX Group and TSX Venture Exchange, our event partner, for helping us to keep things going during these very unusual times. We also recognize the vital support provided by our core sponsors, Baskin, MNP, Lead Jones Gable, Olympia Trust Company. And we'd also like to thank our supporters and extended network for their support. In particular, InvestmentPitch Media and the Newswire, who help us get it out into the Ethernet. And also, we'd like to thank Calgary Meg and Calgary CIM, Sterling Merchant Capital, and others. Thank you very much for your help. Some housekeeping matters. You will note a red Reconnect tab at the top of your screen if you lose audio. Just click it and you will be reconnected. The chat board may be utilized in this session. Please be clear as to whom your question is being addressed. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at Take Stock, and Take Stock, its principal Raj Joshi, and yours truly may have equity investments in companies which present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence, go to SEDAR, connect with the companies directly in order to get detailed information and seek professional investment advice. Contact details for the presenters can be found in the chat board, already posted there, and will be posted at the end of today's show and also on our website, takestocklive.com. Today we have two companies, Mike Labach, Corporate Development with Taiga Gold, symbol TGC, and Mitchell Smith, VP Investor Relations with Brixton Metals, symbol BBB. Let's start with Mike Labach. Born and raised in northern Saskatchewan, Mike is quite familiar with the Taiga environment where the projects are located. He has worked in the resource sector his entire career, at the outset managing fisheries and forestry resources in various locations throughout British Columbia, then as owner-operator of a fly fishing guide business in southern British Columbia for 15 years. Mike has been with Eagle Plains Resources, parent of Taiga Gold, as investor relations and corporate development since 2005, during which time he also assisted with another Eagle Plains spinout, Copper Canyon Resources, ultimately acquired by Nova Gold in 2011. Mike, it's all yours.
Hi, Mark. Thanks for having us out today. I'm just going to go off video here so everyone can concentrate on our presentation. So thanks everyone for coming out. Welcome to our presentation of Taiga Gold Corp. So this photo you see here is a pretty good depiction of the Taiga, the type of environment we work in. It's basically the boreal forest. And this happens to be the boreal forest of the western extent of the Canadian Shield into eastern Saskatchewan. This float plane, it's a Norseman, and it's a typical and cost-effective way of getting around this environment. And as you can see, there's lots of trees, lots of lakes, of course, lots of bugs, and lots of rocks, which is the focus of our endeavors. This is Taiga's forward-looking statement, which you can digest at your leisure on our website. So it's important to show where Taiga came from in order to see where we may be going. Eagle Plains Resources is the parent of Taiga, and it's a project generator that spins out assets that have potential for acquisition by other companies. We've done this in the past with Copper Canyon Resources, and this resulted in a $65 million payout to shareholders. In addition, we've provided opportunities for some spectacular returns through both of these companies, as you can see along the way here. So, can we expect lightning to strike again? So here's Taiga's story now. It was spun out from Eagle Plains Resources on a one Taiga for 2 Eagle Plains share to shareholders in April 2018. There's 80 million shares outstanding currently, and 12 of these are held by Eagle Plains, which is an important aspect of control of the company when you're looking for it to be acquired. It's focused on gold exploration in Saskatchewan in the area I described. The flagship project is the Fisher, and it's currently operated by an 80-20 joint venture between Taiga Gold Corp, which is the 20% owner, and SSR Mining, which is the 80% owner. We have 5 additional gold projects. 3 of these are optioned, currently all 100% owned. And basically, like I mentioned, Taiga was spun out of Eagle Plains to be bought, basically. So, our projects are located in what's known as the Trans-Hudson Corridor. This is where 2 main plates of the North American continent collided, creating a rich environment for mineral exploration. Taiga's projects are within a greenstone belt geology, similar to that of the more well-known belts of Eastern Canada. And incidentally, this Trans-Hudson has seen about 1% of the exploration of these other belts. So it's pretty early days for this area. All right, so dropping down a few hundred or a few thousand feet, I guess, here. For a closer look, we can see Taiga's projects in yellow in relation to SSR Mining's CB Gold operation in green up here. Taiga's flagship project, the Fisher, is located adjacent to and on the same structure as the Santoy mine up here. And this structure is called the Santoy Shear structure. The other Taiga projects occupy much of the remaining prospective geology of the region here along this Tabernor Fault, which is again the main suture zone of that Trans-Hudson corridor. So beginning in 2012, we conducted about 4 years of exploration in this area and determined that these projects are highly prospective for gold. We had just completed assembling these when SSR stepped in and spent $337 million to acquire Claude Resources for control of the CB Gold operation up here in green that I pointed out. In essence, SSR Mining put their money where our mouth was, in essence. So I'll carry on to the next slide here. So this here is a picture of the CB Gold operation, the mill and the camp area. And on the heels of their purchase, SSR Mining announced a $90 million upgrade, bringing their investment in the CB Gold operation to north of $400 million. So back to the Santoy Shear structure, this is the outcrop above the Santoy mine. Really nothing to write home about, but below this is where these veins coalesce into a deposit roughly as described to us by SSR Mining's personnel, roughly 1 to 200 meters in length, 40 to 50 meters in plunge, and anywhere from 2 to greater than 10 meters in width. And this runs 9 to 10 grams per ton. So soon after acquisition of the CB Gold operation, SSR Mining optioned the Fisher project from Taiga. Well, from Eagle Plains at that time, but in essence, Taiga now. After 4 years of exploration, costing well over $12 million, they've identified that this very important structure, the Santoy Shear structure here, extends not only onto the Fisher property, but actually bisects the entire property. So, based on this knowledge, the last few drill programs have resulted in an impressive trajectory of discovery along this structure. We now have 4 separate areas of high-grade gold mineralization in drill intercepts. And the current focus is in the MAC North zone, where the latest drilling has delineated continuous high-grade mineralization, making this zone a target for resource definition in upcoming drilling. Outside of these discovery areas, other high-priority targets have been identified along the structure that remain to be tested. So what's the outlook for 2021? Well, SSR Mining has elected to execute its maximum earn-in opportunity at the Fisher, and as described earlier, an 80-20 JV has been formed. The latest drilling has identified continuity of gold mineralization at the MAC North, which is now a target for resource definition. We anticipate a significant amount of drilling to be carried out in 2021. And this brings us to a case why Taiga represents a case for acquisition. Well, SSR Mining has made a significant investment in the CB Gold operation, again, north of $400 million. At 125,000 ounces a year of gold production, according to their reserves that I've recently looked at, they have 4 years remaining at that level. So they continue to increase their production, and this further impacts those reserves. They've invested far more than required by the Fisher option earn-in requirements. In fact, greater than $12 million rather than the 4 that were required, suggesting other motives at for Taiga at the Fisher. Taiga also holds most of the remaining prospective geology in the region. And we also hold a 2.5% NSR in the Fisher. And the only way to extinguish this royalty is to control the company, Taiga Gold itself. So some of the other catalysts are that we've recently, for Taiga Gold, we've recently completed a drill program at the Leland property with assays pending. And the Leland property, if you recall, is contiguous with the Fisher to the south and west. There's a drill program planned for the Orchid to be funded by Taiga Gold. This is our 100% owned and controlled property by Taiga Gold Corp. And we planned ground-based exploration programs on a couple of our other projects. So that brings me to the conclusion of this presentation. For more information, please feel free to contact me at these coordinates. And again, thanks for coming out, and I look forward to your questions.
Thank you very much,
Thanks,
Mike.
Mark.
Thank you very much, Mike Labach. And next up, we have Mitchell Smith with Brixton Metals. So thank you, Mike, for joining us, or Mitchell for joining us. Mitchell is VP Investor Relations for Brixton Metals. He joined BBB in 2017 and has a background in Canadian capital markets, specifically the junior mining sector. Prior to Brixton, Mitchell worked at a boutique investor relations firm in Vancouver. He has an economics graduate degree from the University of British Columbia, Okanagan. Mitchell, it's yours.
Thank you very much, and very happy to be here. I'd love to be there in person when all this is over, but for now the virtual will have to do, and we'll make the best of it. But hopefully we can kind of stay in touch, and our doors are always open via phone and email if anyone wants to chat. So our ticker on the TSX Venture is BBB. For those on the OTC QB, it's BBBXF. This shot here is a shot of our Thorn project in the Golden Triangle. That's our camp and our runway right there, just for your reference. I will be making some forward-looking statements here, so please read our safe harbor statement when you can. Brixton's 2021 strategy, silver, gold, and copper. We're conducting systematic exploration on our wholly owned projects. We're looking to generate high impact results, grow our silver, gold, and copper resources and advance these projects to development. One of those projects, the Hog Heaven project in Montana, we're looking to monetize that, and we did through an attractive JV partnership. That's with Robert Friedland's HPX. It's a $44.5 million USD earn-in JV on that project, which I'll touch on shortly here. Quick look at our team. It's an experienced team with a record of success. Gary Thompson's the chairman and CEO. He's a co-founder of Brixton. He's got 27 years experience in capital markets. Kale Moody was the CFO of Underworld Resources, which sold to Kinross in 2009. We just brought Christina Anstey on as our VP Exploration, so happy to have her. And I have a background in capital markets and mining as well. Here's our share structure. We're hover around 25 cents in the last few days. We have 198 million shares outstanding. So we're around a 50 million market cap as of recent. We started the year with over $9 million in cash in the bank. So very good, very aggressive treasury position for a company of our size. We do have excellent liquidity as well. We've traded over 50 million shares year to date in 2021. So great liquidity. It's around 1 million and 1.25 million shares per day on average. So great liquidity. There's our 1 year snapshot of our stock chart. It is Brixton's 10-year anniversary here, as we were formed back in 2010. So happy to still be around after 10 years. And there's our ownership. We do have 3 billionaires as our largest shareholders. Eric Sprott, Robert Friedland, and Rob McEwen are our 3 largest. Management's got a big stake in the game, and Hecla US Global have positions as well. So our 4 project locations, we have 2 projects in northern BC. The Thorn is our main flagship project in the Golden Triangle. The Atlan Goldfields project near Atlan, BC. The Hog Heaven project there in Montana, that's the one with the JV with HPX. And then our Langus project, that's in the Cobalt camp of Ontario. And we're just, as of right now, completing a 20,000 meter drill campaign there. So we've been putting out news with more news to come as we get the results from there. Quick overview of our Hog Heaven project in Montana. It has a non-compliant resource of 47 million ounces of silver and 250,000 ounces of gold. Back in the 80s, it actually was going to be a mine, but the price of silver went to $5, I believe, in the early 90s, and kind of the bottom fell out of the project, but it was permitted to be a mine and was going to move forward. So it's a very nice project, and we're really excited to see what HPX can do with it going forward here. So the earn-in JV deal with HPX is a $44.5 million USD deal. Brixton got $500,000 USD on signing, and we're going to get $500,000 for the next 4 years. And then year 5 and 6, we're going to get $1 million payments each of those years. So 4.5 US in cash to Brixton along the term of the deal. HPX can spend 15 million USD in the ground to earn 51% of it. And they have a right to up that to 75% with an additional 25 USD in spend. So we're really excited to kind of follow along with that and put that news to market as we receive it and see what they can come up with. They are going to be the operators of this. They're going to control the exploration and development activities. The geophysics is coming in the spring. Drilling should be in the summer, fall of this year. And they're going to be targeting large-scale, high-grade copper, gold, and silver. So really excited to watch this advance. A little summary of the Langus project in the Cobalt camp of Ontario. It's about 500 kilometers north of Toronto. It is a brownfields exploration and development opportunity. The Langus mine, a past production of 10.4 million ounces of silver at a really high grade, 25 ounces per ton. The Hudson Bay mine, which we own, which is a stone's throw from Langus, past production of 6.4 million ounces of silver at 123 ounces per ton. And with quite a bit of cobalt in there as well. There is excellent infrastructure here. There's year-round road access. We have been drilling year-round, which is great. It's got all the infrastructure, power, railway, and mills, everything you need to build a mine. We have been very proactive with our exploration agreement with the First Nations, which we signed in 2016. So we've been doing a lot of work in that regard. And the plan is to move this towards a maiden 43-101 at this project. So we're completing a 20,000 meter drill campaign right now, and we'll put the news to market as we receive it. Here's a little shot of the native silver at Langus. That top left one there, that's a grab sample at surface, 6,000 grams per ton silver with a lot of cobalt in there. The middle left there was a drill hole from 2020, 2 meters of 700 grams silver. And this bottom one here was from 2018, 2 meters of over 10 kilos of silver. So really nice numbers coming out of here. It's near surface, and we're fingers crossed for some more of this going forward. So here's our flagship Thorn project in the Golden Triangle. You can see the claim block in the top left of the Golden Triangle. It's what is now the largest land holding in the Golden Triangle. It's a 2,600 square kilometer claim block. We've morphed this thing from about 200 square kilometers when we started to now 2,600 with a lot of deals along the way. It's very accessible for what seems to be a remote project. You can actually be, if you leave Vancouver in the morning, you can actually be in camp for lunch. It's a 45-minute flight south from Whitehorse, so if you time it right, you can be in there real quick. It's a district scale project. We've done lots of work with the local First Nations in this one as well. And if you can see real close on the left part of our claim block, it's actually staked out to Tidewater, U.S. Tidewater. So we're starting to think about the future of this project and what ways to make it easily monetizable and how to move this thing forward. So we're taking the steps that we can to do that. Here's the Camp Creek in the Thorn project. It's where a lot of our drilling has happened as of recent. The drill hole on the far right there, that's hole 150 from back in 2019. And that was 550 meters of 2 grams gold equivalent. And this is the hole that brought Eric Sprott into the deal. He came in for $4 million investment. He's about a 14% shareholder of Brixton, I believe. And then the hole 180 there in the middle bottom, that was a hole from 2020. The bottom of the hole was 6 meters of 2.2% copper equivalent. So the plan this year in 2021 is to ream that one out farther, a few hundred meters deeper, and really test the depth of here. All previous drilling prior to 2019 didn't drill deep enough to test the porphyry. So that's what we're after now. We're doing deep holes here, and the grades seem to be increasing with depth. This little chart on the bottom left, which I know you can't read the numbers, but you can see the numbers do increase as we go deeper. So that's the plan of attack going forward and the plan for 2021. Here's our Outlaw gold target. It's one of the central targets in the Thorn project. It's relatively near surface. It's about a 600 meter, if you can see the scale bar there, it's 600 meter strike along the horizon there. Not very deep, which is nice with the plan to do some more drilling there this summer and to build a resource as soon as possible. There is some good spacing along here. It's along the ridge. If you can see the scale bar, it's 100 to 150 meters or so in between holes marching along the ridge. And we're excited to do more there this summer. This Metla target was a recent acquisition from 2020. You see the top right in the claim block there. It really tied in our claim block nicely and allowed us to continue what is now about a 70 or 75 kilometer mineralized trend. So we do have a planned 2021 drill program here. The picture in the bottom right there is a sample that was grabbed this year. So to summary, Brixton's got a diversified precious and base metals portfolio in low-risk jurisdictions like BC, Ontario, Montana, looking for copper, gold, and silver. A strong shareholder base, 3 billionaires on the board. Management's got a big stake. We do have multiple drill-ready targets with upside for resource expansion. With Brixton, you get exposure to over 3,700 square kilometers of combined mineral claim holdings. And we have lots of upside through our partner-funded JV with HPX at Montana. So that's the presentation for Brixton, and there's my contact information if anybody has any questions.
Thank you very much, Mitchell. And stay with us, and let's bring Mike back on with us. Very good. Glad to have you both. And
thanks, Mark.
The first question I have for each of you, and let's go with Mike and then Mitchell. Can you be a little more explicit on your exploration objectives in 2021?
Well, with regard to our flagship property, Taiga Gold, the Fisher, which is under joint venture with SSR Mining right now. The discovery and the recent reporting of the drilling at the Mac North, which again resulted in that consistent and continuous zone of gold being discovered. Our plan there is to go ahead and with the next drilling exercise to define a resource, maiden resource of the property. After that, I presume that it's not set in stone yet or anything, but that we'll carry on with testing those other 3 areas that discoveries have been made, and to follow up likely on 2 other targets, the high priority targets that we couldn't get to in 2020 due to the some access issues, and then of course the onset of COVID. So that's our primary goal for the Fisher going forward, is that definition of a resource at the Mac North, and then followed that up with some summer programs, surface-based programs, and drilling. There you have it.
For Brixton, we're in the process of wrapping up our 20,000 meter campaign at Langus, as I mentioned, in the Cobalt camp. Thorn, the plan is to follow up with some more deep drilling at the Camp Creek Porphyry. Hole 181, like I mentioned, ended in 6 meters of 2% copper. So we'd really like to explore that deeper, ream that out a few more 100 meters, and really test the depth of this thing. We're also going to follow up with some shallow drilling in the Outlaw zone and Trapper. The Outlaw zone is one that's very shallow as well, and we're hoping to build a resource there. So that's the plan for 2021, and can't wait to get back in there.
Very good. Now, staying with Mitchell and then back to Mike, I'm assuming, just repeat once more, I'm assuming that you're fully funded for this exploration round, and secondly, timing of results.
Sure. So we're currently fully funded for 2021. We have over 9 million in cash to start the year. As it stands, with all the drilling we have planned, we'll probably finish the year with 2 to 3 million in the till if no new money is raised. Of course, this could change depending on the first batch of drill results that come in, as well as current market conditions as well. So that'll be kind of a wait and see. And just, it really depends on where we go to start the year. What was the second part of your question there? Sorry.
Timing.
Timing. Yeah, of course. We've been putting out results from our Langus project every 2 weeks, every 3 weeks for the last little while, and we could expect to continue to do that for the next month or so. Probably we just finished, so I'd say probably in 4 to 6 weeks we'll have all the news out from silver, and then we'll be getting into Thorn and the Golden Triangle in probably May to June, so maybe results in kind of June, July from Thorn.
All right. Well, as far as timing goes, we're anticipating the drilling to start at the Mac North zone of the Fisher project next week. So it's upon us. We also anticipate later on in this year to conduct a self-funded approximately $1 million program at the Orchid property located south of the Fisher. And we are funded. We just received a $3 million cash payment from SSR Mining, and that was in order for them to maximize their earn-in on the Fisher. It was taking their interest from 60% to 80%, and that resulted in a $3 million cash payment to us. And plus, we also get a $100,000 cash payment annually to us as an advance royalty. So we're funded.
Okay, and flipping back to Mike and then Mitchell, I'm going to stick on some joint venture questions for a little while. Mike, in your case, at what point do you have to start participating on a pro rata basis with SSR?
Right now. we like I said, they've entered into an 80-20 JV with us on the Fisher by exercising that last and their final 20% interest. And yeah, that the JV's formed currently. We're going forward on the Fisher with SSR Mining on a 20% basis. Whereas two of our other programs, the Leland and the SAM, are funded by option partners, and the Orchid that we plan to work on later would be funded entirely by Taiga Gold.
Right. But to the point of the Fisher project, you're now having to fund 20% of whatever
Correct.
SSR decides to set. Is there any dilution clause if you do not participate?
Yes. We anticipate to be able to participate in the foreseeable future. And the fact that they spent $12 million rather than $4 to earn in that initial 60% interest deems Taiga to have spent 40% of that. So it dilutes their dilution ability of us, because we're deemed to have spent that amount, going 40% of $12 million already. So the way the formula works, it makes it harder and harder to be diluted out.
Okay. And then Mitchell, in terms of Hog Heaven deal, it's currently an option agreement, and HPX presumably could walk away if the results disappoint their big company expectations. Does HPX have a minimum spend in year one at Hog Heaven, or have they indicated a minimum budget?
HPX needs, according to the deal, the HPX needs to spend $3 million by the second anniversary to move forward. Otherwise, the Brixton gets the project back. So that's kind of their commitment. They can choose to walk away, like you say, but they've been in there. They like what they've seen so far, and we're excited to see what happens this summer at the start. But we do get it back the second anniversary if they don't have that minimum spend.
And on the Thorn and Langus, is your objective to advance those to the point where you get a partner on those as well?
We would definitely entertain all offers that would provide value to shareholders. We're not in the business of getting our money back, so the deal would have to be very beneficial. We're very bullish on the near-term metals market, so a deal would have to be quite attractive for that. But our plan is to advance it. A JV on Thorn would be great. It does need lots of money and a lot of time on that project, so that would be beneficial. But it would have to be the right deal for us and for shareholders.
Okay, and while we're there, on Langus, are there other participants in the Cobalt camp near to you?
Yeah, Canada Silver Cobalt has been active. They put together a resource last year, 7 million ounces of silver at 7 kilos per ton grade, I believe, so it's promising. But there is activity in the area. We're starting to hear more about it, and just the infrastructure side of things and how accessible it is has been really beneficial. We like to be able to do things all year and not have a long drought of drilling in the middle. So we're excited about the camp going forward.
Okay, good. And Mike, what are your partners' plans on Leland in particular? Can you be a little more explicit?
Well, a drill program just wrapped up there, a 1,600 meter drill program, and those assays are pending. So I think future programs will be predicated on the results of that. As a note, the Leland, which again is contiguous with the Fisher, the shear zones within the Leland property are more east-west trending, and that's analogous to what was the shear zone and the mine. The CB Gold mine was the original mine of the CB Gold operation, was located on a structure analogous to that. Whereas if you look at on the Fisher property, that Santoy shear is more of a north-south trending shear, and of course it's on the same shear, located only 1.5 kilometers to the south of the CB mine. So that the Leland will be definitely predicated upon the results of what we see here in this drill program, how they're going to form future ones. I think there's other targets on there that remained untested, but this drill program, you're always limited. It focused on a certain area of that property. Yeah.
Now I want to, Michael Marchand has posted a question. I'm going to modify it slightly and extend it to both of you. So each of you have this major participant. One is a JV, one is an option that would turn into a JV. What is your longer term corporate objective? Do you intend to try and maintain your percentage interest, and in the case of Hog Heaven, once the earn-in has been completed? In other words, do you want to try to participate all the way through to mine, or do you want to look to have the project bought out or the company bought out and maybe the other projects spun out in a new company as a residual asset for the shareholders? So Mitchell and then Mike.
Yeah, sure. I mean, that's going to be definitely kind of a fluid answer, I think, for Brixton going forward. HPX can kind of take as long as 9-10 years with their program to march their way up along the ownership curve, and by the end of it, we would own 25% of it and have to participate to build a mine or sell that stake to HPX. Our take is that if HPX is having success there, then Robert Friedland would probably get pretty greedy pretty fast and would probably try to acquire Brixton's stake at some point, and that'd be a great win for Brixton and for shareholders. Another option is we could sell that stake to somebody else that wants to participate, or we could raise some money and be mine builders as well and own 25% of a mine. So that's kind of a fluid answer, and it really depends on the market and the conditions at the time. But I think all three answers are really a big win for Brixton. So we're excited about that.
As far as the Fisher project goes and Taiga Gold Corp goes, we are looking for a repeat of Copper Canyon, which was an outright purchase of the company, which is then, of course, the shareholders are monetized for that purchase of that company. With the case of Copper Canyon, some of the other assets were spun out into another company called Dominica Mining and Metals. So that potentially could happen. I'm not sure of the mechanism, but definitely the strategy here is for a repeat of Copper Canyon, have Taiga Gold Corp purchase.
And of course, Mike also made his question deeper, so I will now extend that to the two of you, and we'll go Mike and Mitchell. Can you please expand on this explanation, including possible timing, corporate culture, and also potential roadblocks?
Well, timing is up to our partner. I'm not inside their head. I certainly don't know. It would be nice once we firmed up some resources there to actually get a handle on the value. Right now, it's definitely, it looks really good from an exploration point of view, but this next round of drilling should really help to firm up what we have at the Mac North Zone. Some roadblocks, well, the drilling, it's very contingent on the drilling there. Another potential roadblock, not certain of the corporate culture at SSR Mining these days. Of course, they just went through a big merger with Alistair. So there's some new senior staff. Again, I think it comes back to the amount of investment that they've made in the area, the amount of reserves that remain. They do kind of have a gun to their head with regard to developing ounces for feeding that the CB mill.
For the time frame for the deal, HPX can choose to accelerate it as fast as they want, as fast as they make the spend commitment in the ground. I think we're going into a hot copper market, and if they do have success there, they're going to speed up this program and put the money needed into it to get it to ultimately to production. So I see it going fast if it's successful, and if they don't find what they're looking for, then Brixton gets it back full ownership. So as far as a roadblock, I don't see one there. If they don't find what they're looking for, then Brixton gets it back with $3 million in spend into it. That wasn't dilutive on Brixton's part. So that's not a roadblock, and they can choose to go as fast as they want to.
Very good. Thank you, gentlemen. So second last question will relate to any of your other projects that you may not have discussed that you'd like to add something on, or a secondary project that you've just touched on and you'd like to expatiate a bit. So Mitchell and then Mike. Sure.
Well, our Atlan Goldfields projects, it's a really nice asset. It's got a great infrastructure. It's close to the town of Atlan. Being a company of our size, we unfortunately don't have the bandwidth or the resources to put towards it. So technically, it's fourth on our list of importance right now. That being said, it is still a great project. There's been great historic drilling in the past, 5 meters of over 500 grams per ton gold near surface, which is quite attractive. We got little to no holding costs in the project, so it's a good opportunity for potentially a partnership deal of some sort. But we're maintaining the project, and it's accessible in BC. Just unfortunately, it's fourth on our rung right now. So that's one we'd like to do more on, but we'd like to also maybe do a deal on that one as well and move it forward.
Well, Taiga Gold has several other properties that, of course, aren't the focus here of today's talk. One is the SAM. It's located a little more to the south in the Flin Flon area. It's optioned out to a partner, but the SAM has a non-43-101 historic resource on it that we're hoping to use modern technology to see if there's any more mineralization there. And this is typically a VMS camp in that Flin Flon area. So we expect to do some ground-based exploration there this summer. We have another property called Marie Lake. Again, it should see some ground-based exploration. But I think the biggest thing for Taiga on its own going ahead this year is at the Orchid. This property, it's on that Tabernar Fault within that Trans-Hudson corridor. It does have some the prospective geology that we're looking at, the volcanics of that greenstone belt. And it's got a large amount of showings that have been untested. And to date, we've worked it over the last 4 years with ground-based exploration, and we've developed a lot of targets on there for gold. And this year, we expect to be out there in force with about $1 million program to test multiple of these targets that we've developed. So we could see some pretty good news coming out of that.
Okay, good, gentlemen. The final question, very concise answers from each of you because we've covered a lot of ground. What are the next, just recap for investors, what's the next milestone or two they can look for? Short, concise answer here. Mike, and then Mitchell.
Resource definition at Fisher, at the Mac North zone, and maybe some other drill results from other zones that will be tested in the Fisher.
For Brixton, we'll be putting out the remainder of our drill results from silver and in Langus in the Cobalt camp over the next 1 to 2 months, so watch for that. We recently signed the definitive earn-in JV with HPX in Montana, so watch for work to start in May, June, and then kind of June, July for the Golden Triangle. So in the next few months, lots to come.
Very good. Thank you very much to our presenters, Mike Labach, Taiga Gold, Mitchell Smith, Brixton Metals. May you have continued success in your exploration, your business, financing, and so on. Been a delight to have you on the show today.
Thanks so much, Mark.
Thanks for having us.
Nice to see you again, Mitchell.
You too. Take care.
Indeed. And there's the contact information for our presenters. To you, our attendees, thank you for your time today and your patience with me as the clunky administrator. We'll get Raj back very soon. Do go to today's company's websites, learn more about them, and check in at TakeStockLive.com. Today's PowerPoint decks should be posted there by tomorrow. In the meantime, be determined in your due diligence and ask tough questions. We'll be back next week, 10th of March. This is Mark and Raj signing out from Take Stock Live.